So I really do enjoy answering questions from subscribers, from people who watch these videos. Please do subscribe, by the way. And being able to help out those of you who have questions about Bitcoin. And believe me, nobody gets Bitcoin the first time that they hear about it. You're completely validated in terms of the fact that I also had similar questions to you. And now I can use whatever knowledge that I've gained and share it with those of you out there, because this question has been asked multiple times. And any other question, please feel free to leave it in the comment section and I'll do my best to get to them. Today's question is, what happens when all of the Bitcoins are mined? What's going to continue to support the network, and what will the transaction fees be? Well, great question. One that I had to answer. Just a little bit of background. Back when Bitcoin began in 2009, Satoshi issued block rewards that are released every 10 minutes. The initial block rewards were 50 Bitcoins, and what you have to do is solve an increasingly complex puzzle. The block rewards, were the biggest incentive for others to start mining Bitcoin. And what mining Bitcoin does is it provides a massive wall of electricity which protects the ledger so that it's unhackable. It is brute force. Today, the hash rate is such that if Google, Amazon, Facebook, NVIDIA, all the big tech companies were to point all of their server power towards Bitcoin and trying to usurp over 50%, which is the minimum that you would need in order to be able to manipulate the network, they would get to approximately, I believe I heard, 1% of the total amount of electricity power that is protecting Bitcoin. So Bitcoin, by the way, is unhackable because of this. And because of the way that it's set up, you can have two foes that otherwise would be at war with one another that want to mine the Bitcoin. And because the incentives are arranged in such a manner, they work towards that project of protecting each other's assets. So you can have Israel, Iran, they're mining Bitcoin, and they're both protecting the ledger, which protects the assets that each of them holds from the efforts of their mining. Now, as time has gone on, the amount that it costs to get on the next block has increased. And that will continue to happen until the year 2140, when the last Bitcoin is mined. At that point, you are going to be seeing tremendous transaction fees as opposed to the early days of Bitcoin when it was nearly free. Today, often you can still get your transaction approved for less than $1, but that's bouncing around. At one point, it was like $30 for each transaction. And that was the first time ever that this is like a year and a half ago, that the transaction fees outweighed the block rewards in terms of the total economic value that is being distributed to the miner that uncovers the block and thus earns the reward. But in the future, in the year 2140, when all the Bitcoin have been dispersed and you've reached the maximum of 21 million, it will be made up of transaction fees which keep the network alive. But then you have a very good question here. Well, what would be the incentive for anybody to use Bitcoin for anything other than huge amounts at that time? Because yes, like selling a New York Manhattan apartment, you might pay $1 million in commissions and fees in order to change ownership. And I believe that the amount of fees that it will take to conduct a transaction on the Bitcoin network in the year 2140 will be substantial. I don't think they'll be anywhere near worth $1 million, but they will be a lot more than they are from here. But imagine being able to do that in 10 minutes instantaneously for a fully liquid commodity, which is Bitcoin. But still, even today, to combat the high transaction costs, you have layer 2, the Lightning Network, you have the Fedimint springing up, you have Cashew, which basically organizes Bitcoin transactions in such a way that they do not go to the layer 1 and they are all conducted on layer 2, and eventually, like a bar tab, over time you can then place the total number of transactions with one transaction fee on the Layer 1 network. But the point being, to simplify things, is that it cheapens the cost of, and also the speed of using Bitcoin. And this is the technology that is being built upon the protocol. And this is what's going to be taking place way off in the future in the year 2140, when this is going to be nearly seamless, because right now there's still a decent amount to perfect. It does not operate as efficiently as MasterCard and Visa do. That is another subject for another video, because I think that they are going to seriously eat into MasterCard and Visa's near monopoly. Point being is that in the year 2140, it will be largely transaction fees that are going to fund the network. There will be fewer Layer 1 transactions because of the cost, but there will be far, far, far many more Layer 2, Layer 3 transactions, however that works out. Of course, I'm looking over 100 years ahead into the future, but this is a fairly clear look into the crystal ball, I hope. Now, if you have a question, please leave it below. I will do my best to answer any good faith question, especially if multiple of you ask the same. And please, by all means, thumb up the video. If you got something out of this, please share. God bless and have a fantastic day.